Some of the things we forget about, because we've been through this very long period of financial repression, today valuations really matter. You really have to pay attention to the price earnings ratio that you're paying for a stock. It's not just good enough to look at it versus, say, a 5-year historical average. You've got to look at it on an absolute basis. The PE on the S&P 500 is 20, which is reasonable. But then when you look at the equal weighted S&P 500, you're paying under 18. It means that you should look beyond the biggest cap names that are driving the index. They also are driving the valuations right now. We've had this surge in technology, this resurgence in the technology stocks. Yesterday was a great day. I think some of it, there's a halo effect off of the Twitter news. But in general, I think you want to look beyond those companies and find companies with great balance sheets, generating a lot of free cash flow, that have high financial returns like return on invested capital and return on equity.
Yeah, and it's also, I guess, a measure of the fact that the market and the economy, as we've said a billion times, and I'll say it again, are very different things. They are related, but ultimately they are different. All right, Dan, we love having you on because you do the deep dive into companies. You offer stock picks, including some that are more in the small and mid-cap style as well. Tell us about Fortive, FTV, and why this is a name that you love.
Yeah, so Fortive was actually spun out of our very favorite company, Danaher Corporation. So you're getting a lot of the same ethos and just the culture that's made Danaher so successful over many, many decades. Fortive is a multi-industry industrial company. The leverage is very modest in the company. But here's the key thing, Brian. This is a company, as well as others, that can make cash acquisitions that are accretive to their earnings. That's very important because these types of companies can take advantage of whatever environment they're presented with.
Yeah, and I know you love Danaher DHR. It's still an FTV, and DHR, I assume, is still on that list. Another company, yes, Dan, that we talked about in the CNBC Pro event a while back, but I know you're sticking with, is Zebra Technologies. We talk about all these big cap tech stocks. Zebra, not a name we talk about ever, if at all. Who is this company and why do you like them?
So, it's remarkable that more people don't really know about Zebra. First of all, it was upgraded at JP Morgan yesterday with over a $500 price target. The share that makes the stock pretty attractive at these levels. Zebra is the #1 company in the barcode printing and data capture space. They've made several acquisitions in the robotics and software area. I mean, you cannot run a warehouse facility or any kind of a logistics facility without Zebra's technology powering it. Particularly now, as supply chains get back to normal, their equipment and services are going to be that much more important as we go on.